Y'all said y'all want to hear me rap. Who you with? Who you claim? Got your one and only girl. What she screaming? Call out my name. I'm on that weekend mood. The world can't handle another Abel. I'm about to hit him with this though. Stock prices going up like trash in a dumpster truck. Beats so fire, had to ask what the is up. Spotify changed the game. Everything is going nuts. News time is here to dissect and how to get new subs. Man, I can't even rap for more than a few seconds. This beat got me so hyped. I'm gonna go back in though. Take out that snare. It's messing me up. I'm for real about to go back in. What, Ron? They don't know the thesis of the episode. Going to market tomorrow. Spotify's already beat you to it. God's plan? Nah, bro. You can barely maneuver through it. Blue Apron? More like April Fool. Spotify, my boy, is gonna take Wall Street to school. Spotify's hitting the stock market. You got that, son? If you can't get the thesis statement from this cold open, then you can't get it nowhere. Album coming soon. It's news time. Delivering to you the news you didn't know about, the news you didn't care about, and the news you didn't know you cared about. With host Chad White. Now, here's that host, Chad White.
Every time you watch this show, I actually owe YouTube 14 cents. So continue watching. Welcome back to News Time. This is an ad-lib there. I'm your host, Chad White, and this is the comedy news that you didn't know about. One of the biggest marks of any company is when they take the step from private to public via the stock market. This move is so that the regular folks like you and I can invest our hard-earned dollars that would most likely already be spent on the company inside of the company. And tomorrow, one of the most used services is about to do just that. Spotify has been around for just under 10 years after being founded in 2006 and officially launched in 2008. The streaming service began as a way for users to freely access all kinds of music in the most bare bones practice. Having grown since then and introducing game-changing features like an embeddable play button and the simple-to-use follow and discover tabs where users can connect with friends and famous people in order to find new music, Spotify now features 71 million subscribers to its pay service, 157 million active users, 35 million songs, and 2 billion playlists. Not to mention, it's available in 65 of the hottest markets like Estonia, Monaco, and Slovakia. Ahoy, Fashlone! As I mentioned before, Spotify is going public in just under 24 hours. This has been a long time coming, having been rumored as far back as last year. Their revenue growth is projected to increase steadily, even if they are a smidge lower than last year's. And the trading that was already happening privately was also doing well. The world's most popular music service is at odds with the stock industry with how it should approach going public. Usually a company would go about it through the IPO process or initial public offering. This is a traditional route that is very tough to explain, so please stick with me. The company will usually contact an underwriting firm who then suggests a few things like type of securities along with the likes of bonds, stocks, and futures, all sorts of things, but mostly stocks. The firm will then choose the best price to launch at, which is very crucial as well. Launching at the wrong price and subsequently seeing your stock lower because you have no vision is incredibly embarrassing, and I can't believe I've invested in 2 companies that ended up as such. And finally, the underwriters dictate the amount of shares to be shared and when it's best to bring the whole shebang to market. The NPR podcast, The Indicator from Planet Money, the catalyst for this episode actually, explains everything in a better, more concrete way than I could ever do on this stupid show that exactly no one watches. But Spotify is doing none of that. That's right. I just taught you something for no one's benefit, except your own. You're welcome. Instead, Spotify is doing a direct public offering, or a DPO. This means that instead of the company selling its shares, the people within the company who already have had shares will be selling theirs. Like I said, The Indicator does a better job. Take a listen.
There won't be a roadshow to meet with investors that the investment bank has a special relationship with. Instead, Spotify hosted a live stream presentation for investors last Thursday.
All right. Good afternoon, everyone. Thanks for coming today, and welcome to Spotify's first Investor Day.
Which, by the way, anybody can go watch online right now.
And because Spotify isn't offering any new shares, its existing owners won't lose any of their stake in the company unless they choose to sell their shares on the stock exchange. That also means Spotify is not raising any new cash.
There's a big problem with this approach. Stockholders within the company won't have any idea of how they're to price their stocks. Some could offer them for $30, but others could go as high as $100. It's like offering to sell your video game to someone else by bypassing GameStop or Best Buy. Sure, you could get more money in the short run, but it's going to take you a while to sell that thing in the first place. Of course, this plan of attack always has its naysayers. David Golden, a managing partner at Revolution Ventures, is one of those citing the company as not using investment banks to their fullest potential. Other critics are saying companies like Spotify and Dropbox, who also started trading within the last month, are paving the way for unicorns, which are private Silicon Valley companies gone public, to be taken seriously within the market. So, why are they doing this? Why take this non-traditional way of going public? When a company goes public, they usually invest in themselves before getting investments from the outsiders who want to invest in them. Spotify can't do that. They can't spend money on an underwriting firm to do all the footwork for them, nor do they want to raise the capital. Actually, they don't even need to. They have almost 4.9 billion to 5.3 billion euros, about 6.8 billion American, worth of revenue. Remember, they're still operating at a loss. Golden writes that the company is taking advantage of the Securities Exchange Act of 1934, which makes it legal for anyone to sell stocks. Spotify themselves provided the numbers for the prices of stock being traded within the company when it was still private back in 2017. And as you can see, the numbers range widely from $37 up to $125. Reuters said private shares were trading as high as $4,200 before the new year. But as I said before, these prices could fluctuate because there's no set price for the initial offering. Also, without underwriters, private shareholders can instantly sell their shares without having to wait 3 months to do so. Then there's the idea of lower investment banking fees. As you can see, it's crazy and wild, and I don't know what I'm talking about. This tactic from Spotify is pretty daring, especially for a company that has had an operating loss of $461.3 million last year. So that's why they're not paying artists. Spotify even admitted to possibly never being able to be a profitable company. Chief Financial Officer Barry McCarthy told investors about the company's plan to aim for growth over profits at the moment. Not to mention, Spotify is in the midst of a $1.6 billion lawsuit from Wixon Music Publishing, the copyright owners of Tom Petty, Missy Elliott, and others, for using artists' music without a license and without compensation. They're seeking $150,000 for over 10,000 songs each, but that user growth has been climbing year over year. Spotify is entering into territory where others have failed. Dropbox faces a great deal of competitors in the cloud storage space. For now, its numbers are holding well, but then there's the meal kit delivery service that podcasters love. Blue Apron's IPO was, well, it blew it. And again, lost me a lot of money. I feel like a Wall Street type. Where's all the coke and the hookers to do all the cokes off of? There are a slew of new meal kit services in the wild, shaking Blue Apron to its core. Spotify doesn't have as many competitors save for Apple Music and Google Play Music. Even with all their struggles, Spotify is asking future investors to see past the bad stuff. Overlook the revenue loss, ignore the gaining competition, don't worry about the long-term profit plan that seems to not be there at all. They want you to believe they have the wherewithal to continue to grow thanks in part to their age. Remember, Spotify is 10 years old. They've got to be doing something right. But it's nearly impossible to teach an old band to go along with current popular music. And that's all the news I have for you for this week on News Time. Why don't you subscribe and check out one of our other videos? Of course, you can always head to the website, cpluscomedy.com, where there are so many great things that we won't liken old bands to new bands in pop music. That was a weird analogy. You can follow us on Twitter at cpluscomedy. Follow me on Twitter at ChadBlackWhite. Like us on Facebook, if you still use that thing. Listen to the Constitutionals podcast. And remember to delete your Facebook, I guess.